Buddy, trading. So this was the trade for today. The 10-minute chart is here. Let's have a look at that. So top-down approach, I use a 10-minute chart and a 1-minute chart. This is the 10-minute. What did I see? Just the one trade today. Ended up like that. So 11 cents for 5 cents risk on crude. I'm only trading crude. Got a plan in place, and this is what happened. So you see all this resistance here on the 10-minute. You've got chop, what I call a chop to not, where the market tried to, you have low range, small bodied wiki bars, and then it opened up here. You can see that right there around 1250. So that's the first sign that maybe we're not going to hold this resistance zone. These bars, next 3 bars are big. You don't really concern yourself with the color of the bar, just the fact that they're big. Then this sort of hanging man was the first, what you would call a hanging man, but for me is a continuation candle. That's the first idea that maybe we're gonna go higher from there, because resistance has become support, changing polarity. Then when we made a higher high and came back here, it's like Mac's failed second entry short, I guess. So you tried to go higher once, then you tried to go higher twice, and you got that. And these candles come right at these highs. So that's how, after 150, I knew I wanted to be long. And as you can see, that's where price came back and tested that area. So that's the first place where, if you like, intelligent traders would have stopped going short. Then the last people would have seen this big reversal candlestick here, not seeing the story leading up to it, and they would have tried to short that, and then lo and behold, that's where we got support later on as well. So this lower low made support here at that last sort of intelligent short, potential short zone, if you misread that. And then these wicks here for the sort of retail standard candlestick following people, if that makes any sense whatsoever. So that was that. So I dropped down to the 1 minute, and this is what I saw. So 150 is here. At that point I want to go long. So what am I looking for? I'm looking for traps. There's several ways to get traps. I won't go into too much. I've got 3 main ways that I look for traps, via what I call appendices, or what is a glorified pipe bottom or top. So if you look up on Wikipedia or whatever, pipe bottom or pipe top, you'll see more or less. So here's an appendix. You see chop to knot, it breaks up, comes back in, and then catches as if it didn't leave that area. That's what I call an appendix, or what some people might call a pipe top in that example. So I'm looking here. I'm just looking for anything that's a trap, that's going to trap people short, because I want to go long. The 10 minutes saying up, so I'm looking for people who are getting trapped going down, hence the trap, if the higher time frame is correct. So one way is, like I said, the appendix. Another way is a failed 2-wave reversal. So just eyeballing the chart, I can see one here, like that. This was the area that failed. Should have gone down there, and it didn't, came up and then went off, but it needs to be in context, so that's just an example. As I said, the second type of trap would be this one here, the appendix, and then this is an example of the third type. And they come, you need to learn the fundamentals, the features, if you like, of the pattern, because they're not ever going to look quite the same, but the concept's always the same. So what we got here? We got range, and again, this is very similar, heavily borrowed, if not directly, from Mac's stuff, with my own little spin on it, of course. So ignore that. You can sort of ignore that candle for all intents and purposes of what we're looking at here. But it is indicative of going up, because where does that wick end? Right at those appendix highs there. See that there? It's right there. So that's clue number 1, that maybe we're going higher. Clue number 2, or number 1, is the 10-minute chart. That's clue number 2. Then you look for the pattern. Range, wick break of that structure where you see just wicks at the bottom there, a lot of wicks and or closes. Then it goes red, then it breaks, and it immediately swallows that candle up, a bullish engulfing. Trap those people who are going short at the candle close here at the break out of the range. Trap those who drop their stop, buy stop or buy limit, whatever it is, to enter short there under that low. Because how do we enter candles? Usually we're either going on closes for bearish candles, going short on closes, or we're going at a break of the lows of the bullish candle. For longs, you just flip it, so you'd go long at this close if you were looking at this this hammer type candle at the bottom of the range, or some people will go one tick above as well. So those are the two main places. You've trapped all those people, both the people who shorted immediately and the people who got on short under there. Big, I don't bother with the volume at this stage on looking at the 1 minute. I'm just looking for the trap. I look for the volume to some degree on the 10-minute chart, and then you just go long here. My rules say that I need to get the stop. I can't risk more than 6 ticks, so 79. Where is the last place where the range was holding? I go 1 tick below, so my stop went 76. I happen to get in 81 actually. You could, 79 is the first entry, and then you'd have a 3 tick stop, so you got a really good risk to reward there, because from 79 you got all the way up. Before any problems you got up to 89, so 10 ticks for 3 risk, but I waited for that wick to be negated as well, get long 81. Actually, I think I missed the entry here because I wasn't quite there on time, because I started at 2 o'clock and that's bang on 2 o'clock. When it came back, as soon as it didn't meet my objectives, I got back in. I got in, not got back in. So if I had got in here, I would have held through that. And then I got out at 91, I think. No, 92. 1 tick off that high as per my rules. The original target was 95 based on a higher time frame, the 10-minute support and resistance, and you can see that 95 did come into play there later. If I just drop a line in there, you can see that it became resistance and came up resistance. That broke, changing polarity, went higher a bit, held still with this wick, and then went off like that. So that's the trade for today. I won't make the video any longer. Click like, thumbs up, subscribe if you want to see my journey going back to funded. Small part of my healing journey, let's call it. We'll see how this ends. I'll be back here tomorrow. Back here then.